Hello traders, this is the second part of how to use the Bollinger Band like a pro. In the first part of the video, I talk about the two sections of the Bollinger Band. The upper section that is above the moving average 50, because I use the Bollinger Band with simple moving average 50, deviation 2. So I talk about the upper band, the section above the middle line, and the section below the middle line. So, and I said that the section below the middle line is bearish section, and the section above the middle line is a bullish section. And I also talk about how you can place your stop carefully by just using the Bollinger Band, and it will help you to enter a trade and manage your trade better. In this, I also talk about the chart pattern, how you use it on the Bollinger Band. As they always say, I say in the previous video that one top form outside the band, the second top form inside the band, and then you sell. But I say to you that when the top is from outside the band and another one is from inside the band, you wait till the trend line is broken and then retest it before you sell. Don't just sell it because there's a second top that was inside the band, otherwise you will make a mistake. And some people also, they will always sell whenever the Bollinger Band reach the upper bound. They think it's overbought. No. Draw your trend lines and wait for the price to break the trend line. The only time you sell is when the trend line is broken, and retest it. And the only time you buy is also when the trend line is broken and retest it. So by knowing which section of the Bollinger Band is bullish and another section that is bearish, you will use the Bollinger Band efficiently. And some traders will always wait for the price to come to the middle before they join the original movement. Suppose the price here you see is going down. Yeah, it comes down here from the edge to the middle. Usually, that's what they call reversion to the mean. The price return to the true value, which is here, the 50, And if the trend will continue, it will turn around and continue. But if you break below it and retest it as it did here, we know that we can sell, and the next target will be this level. So people use the Bollinger Band as a target level. They sell here, they take profit here. If you break here, they will sell again here and they will take profit here. So it's a very powerful tool to tell you where to place your stop and also how to manage your trade, telling you the best way to exit and also to know your target. In this second part, I want to talk about the size of the Bollinger Band. As you can see here, the Bollinger Band was quite small size here, horizontal. This is the quiet period of the market, what people call consolidation period. In this period, is the best indicator to use is the RSI indicator. I prefer the RSI indicator compared to the stochastic indicator because the RSI indicator, in most cases, sometimes the stochastic will show overbought condition while the RSI is still crossing the middle line, rising upwards, and the price will respect the RSI indicator compared to the stochastic indicator that is telling you that it's overbought condition, and the vice versa. Also, sometimes the stochastic will be oversold while the stochastic is still crossing the middle 50 line going downward, and the price will follow the RSI indicator instead of the stochastic indicator. So in this condition, I prefer to use the RSI indicator, and then the method is to sell when, in theory, they say you sell when the price reaches the upper band. During the quiet period, you sell at the upper band, yes, when the RSI indicator is overbought, and you take your profit at the lower band, yes, and then you buy again at the lower band when the RSI indicator is oversold, and then you take profit at the upper band, and then you sell again at the upper band when the RSI is overbought. And you'll be doing this up and down till either the resistance is broken or the support line is broken to define a new trend. But I do not tell you to do that. I prefer that people use a different way. Overbought RSI, price at upper band, and then trend line is broken. If the trend line is not broken, don't sell anything. When the price is at the lower band, RSI oversold, don't just buy. Wait till the trend line is broken and then buy and take your profit there. It doesn't mean that the price must go to the other end of the band, but there is a high probability that the price will go to the upper bounds. That's the theory. But it's up to you. You decide and you manage your trade carefully. So in this second part, you learn something about the size or the intensity of the volatility or the period of consolidation. The Bollinger Band indicator will tell you now, okay, now this is a period of consolidation. This is a period of quietness. Soon there will be another trend that will follow. And the trend will begin only when the resistance that were the resistance that were established and the support line that were established were broken or violated, So here we have this resistance level here. Suddenly, boom, the price break it out. That will have this will have our attention, and we will be prepared to be bullish. But we wait for a retest. The retest happened here. It was not a good one. It was not a good one, and the price went up, went up, went up. It closed again below it. It was not a good thing here at all. You see, it wasn't at all. You see this session here. But if you look carefully, maybe MACD will help you in this condition. You will see that the simple moving 50, the middle line, it was rising nicely here. So it doesn't mean that the price cannot turn around again, But you will see that after this triangle is broken, you see this trend line here I draw and the horizontal line, and the price break above this triangle here. We know that we are out of the box now, and we can buy plus the slope of this simple moving average 50. So that's how you use the quiet period and also wait for the Bollinger Band to direct you towards the next trend. Usually during the Asian session, those people who trade the forex, they will see that the price will display a quiet period, a period of consolidation during the Asian session. And as soon as London is open, you will see this pattern, this triangle will form most cases, or the price will break above it. Sometimes there are some fake signal. You break it, retest nicely, and then give another one only to shoot the other way around. But if you are careful here, after you break it and retest it, you place your stop below the midline. If you are conservative traders, But those with deep pocket may put it outside this band here, which is not a very good trade management because the reward risk ratio is not very good, because if you fail, you're going to lose more than you're going to win. So I would prefer to put it somewhere here. As soon as I know, the only time I do that is when I know that the uptrend has begun or a downtrend has begun. Downtrend has begun. Okay, so this is what's happened. So here we know straight away after this triangle is broken that the movement now is towards the up, and this is what's happened here. And the one top here, kind of top, the price just went horizontal, and then it break this level here, and that's it. And it went down again below the middle. So when they see the Bollinger Band open big like this, you know that it's a volatility period, a busy period. When it's squeezed like this, there's a quiet period. But you always use that in conjunction with other indicator, with all the things that you know already, value support, value resistance, the cause and effect of the stock market, and you will be able to use the Bollinger Band with success. Till next time, all the best.